Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
Anyway, off we go.
Okay.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back on, Jim.
Ross, last year on August 11th, you commented on CMHC's claim that housing starts had started to increase in July, but you said the opposite was true. This week, CMHC has just commented on the July 2021 starts, and they claim that starts are falling. Are housing starts really going down?
Are housing starts really going down? No, housing starts are increasing. So if you go, like you said, go back to the old show, and they're all in the House Street archives, and fact check what we're saying today against what we said last year, right? I mean, that's the only way you can find out if you can trust what somebody's saying. Last year at this time, CMHC was stating that the big headlines were starts were increasing. And then we told everyone in the show here last year, no, the way that we measure them, they're actually decreasing. We told you why that would have been happening. So I'm going to say the same thing today. Actually, CMHC says this year, now, the reverse. Home sales are falling. Okay, Ross, so were you really forecasting that last July? And now CMHC's reporting it? Or do you see it differently again this year? And I say, yeah, we see it differently again this year, because as I'm pretty sure back in that show, we talked about how latent housing starts data actually is, and why it's a function of a housing market, how a housing market was functioning years before. I suspect back then I would have also mentioned something about the surge that was going to come into starts. In other words, what were reporting last July, the delay was exactly the same last year as it was this year. So that means when you go back to last July, they were actually reporting on decisions that were made in 2017. Generally speaking, when they're reporting on this July, they were reporting on decisions that were made back in 2018. So if you don't know how to make up for that latency, which is years, folks, we're talking years, and they present this data this year, as they did last, as if it's current. And it's not current data. It's not current. It's latent data, and starts are basically almost the most latent that you can get. Permits is another very, very misleading data point that CMHC and StatsCan and the government, well, actually all of the financial news networks, continually cite. But they're confused on what they're actually reporting, again, because I believe they've been misled for decades and decades about these numbers. So permits is always the worst, because builders can create permit to get financing in place, and then they can cancel the permit, and then they can bring out another permit. So permits have always been a very, very difficult metric to use, and we would suggest that no consumer ever even looks at permit data because it's so complicated. Now, starts data is a little bit different, because a start is measured by when a shovel goes into the ground. That is a totally different thing, because the builder is then committed to finishing that house or that high rise, whatever the case is. So when you hear now about July starts are declining, starting to fall, what you're actually hearing them is that they're saying seasonally adjusted starts are falling. Again, it's lunacy to use seasonally adjusted data in a year after COVID because it skews all of the numbers that you're in comparison with. When you're comparing them against last year, those numbers were messed up because of COVID in a seasonally adjusted format. And this year they're messed up. So maybe that's why CMHC has made two mistakes again, because actual starts, as expected, from 2018, early 2019 housing market data, starts now are actually rising on an actual basis, not seasonally adjusted basis.
Ross, well, when it comes to housing starts, first of all, basing it seasonally, what a stupid thing to say when Canada has a season where you can build things and then a season when you can't. I mean, how many housing starts in most of Canada in the middle of July or January?
Well, this is why they say the seasonally adjusted numbers are the numbers that you should rely upon. And we say, no, you never, ever use seasonally adjusted numbers, Jim, are only valid for a short period of time from our context when it comes to housing. Because that would be, let's say that there's a snowstorm in Calgary in February. So you may see a change in the market for a 1 week period. But you would need a snowstorm for the entire month of February for it to be changed. So they try to take the data over the last decade or so and then say, oh, well, this normally happens in February. There's normally this many days of snow, so we need to adjust this February's data point. No, you're looking at a number that was just issued for this July that is a consequence of firm contractual decisions that were made in 2018, early 2019, years before. If you're not tracking where the housing market is back then, and you're not knowing how the sales mix is structured, you're not going to know how starts are going to be impacted 2 or 3 years down the road. As an investor, outside of the housing itself, you're an investor in bank stocks. You're an investor in lumber. You're an investor in concrete plants, aggregate plants even. You're an investor in Home Depot, Rona, Lowe's, all of the things that are connected with housing starts. If you know what's going to happen 2 years ahead or 3 years ahead, then you can structure your investments to capitalize on those things. I mean, we just heard about how now, shockingly, Home Depot, Jim, is their sales are starting to slide. That's not shocking to us. We know that this is another latent metric. So if you know Home Depot, people are going to need to go into Home Depot to buy stuff because of what you're reading in a housing market. You know that their sales are going to go up, and as a consequence, you would expect their share price to go up. So you've got this huge lead in these type of things. Look, Jim, this is no different, really, than Home Capital Group. Remember 2016, Home Capital Group went almost bankrupt. There was basically a run on their mortgage book. And then Warren Buffett jumped in and helped out on a Home Capital Group. Well, if you go back to listen to our old shows on Home Capital Group, this is the exact same thing we were talking about. No one had any worry about Home Capital Group because there was enough velocity in the housing market that Home Capital Group's risk was going to be removed in the next year and a half. The only person who capitalized on that was Warren Buffett, and he reaped hundreds of millions of dollars from that deal. Why? Because I suspect he understands how latent most housing market metrics are. So what I would tell you folks is when the newspapers, the media is seeking to make a headline and they're seeking to create clickbait by saying things like accelerating, falling, it's just too complicated to follow. And why it's too complicated is they're actually reporting on a housing market years ago.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, with the federal election now underway, Connor in St. Thomas, Ontario wants to know, what can politicians do to lower the cost of housing in Canada? And can Ross give us a clear reference point?
Yeah. There is only one thing that can make housing more affordable and help reduce house price growth. Only one thing. Now, this is that the government can do, folks. Okay? The housing market itself, as we have said on this show for years, will take care of itself. It will correct. The housing market will correct. There is no government that has anything in its power to have a perpetual increase in house prices. It is a mathematical and mortgaging impossibility. But a government only has one way of making housing more affordable and limiting house price growth in the future, and that is to add backyards to the country. The problem is your politicians are not willing to make the compromises that are needed to grow the housing stock in the manner that's needed to make housing more affordable. Their refusal to do that means instead they are going with the false belief that densification is going to be a solution and that taxpayer assistance on housing affordability is a solution. When it's not, it only makes it worse. Densification anywhere in the entire planet has only led to higher house prices when you have a growing population base. Now, there are countries where the population is declining and they're more dense cities. But since the population is declining, that's the reason why housing is affordable. But in a country like Canada, where our population is growing and where the current federal government is suggesting they're going to be bringing in somewhere in the neighborhood of 1.2 million new citizens over the next 3 years if reelected. I think it's 1.6 million over the next first 4 year term of if they've got a majority government. That's going to require a whole bunch of backyards to be added to this country if you don't want to have higher house prices, if you don't want to worsen affordability. I'm saying that outside of a correcting housing market. So what you should be looking for in this election is one thing and one thing alone. Any political party who is committed to adding at minimum 1.4 million backyards in Canada. Not 1.4 million balconies. I'm saying 1.4 million backyards. They don't need to be huge backyards. In other words, the typical Canadian 50 by 120 foot lot, or 50 by 100 foot lot, or 50 or by 32 by 80 foot lot. 32 by 80 probably would be the right number in a worst case scenario. But you're not going to hear that. None of these parties are going to say that. What they're going to say is they're going to build. Someone may say we want to build more houses. But what they're really saying is we want to stack kids one on top of another in a condominium building, which only makes it worse. So, when you hear things, you live in St. Thomas. So St. Thomas, Ontario already has some of the best builders in the country. You've had affordability, which has been drastically altered by your L-Star, the London St. Thomas Real Estate Board in that area, commingling brand new sales with resales, which has allowed them to create these crazy average house price gains over the last year. You already have builders in your neighborhood who are totally competent with growing out your housing stock, for those builders to make a great profit, for them to hire a whole bunch of new workers with high-paying jobs in your community. Those workers who can't make enough money flipping burgers at the burger joint. Well, why not create high-paying jobs by building more single detached homes with backyards? You're not going to hear a government say that right now, Connor, okay? They may suggest, we're going to build new houses, but unless they say we're going to add 1.4 million new backyards over the next 7 years with added backyards that is equal to the amount of population growth we are going to experience, then those solutions are not there. Housing affordability will not get better. House prices are not going to decline as much as they would. That said, Connor, a housing correction, which is necessary right now, is going to take care of a lot of that. But when the correction is finally over, if there's a way for the governments to keep their mortgage lending rates as low as they are today, which I don't know the math of, I don't think math exists that allows a country to extract itself from the interest rate trap, again, as we've talked on previous shows. None of these parties are doing anything to help you. I really believe, Connor, that they don't care about you. I really don't believe that they care about the Canadian family. I don't believe that. I think they believe on getting power, and they're willing to make up any story that you will believe to access that power. I don't know why they want it, but they want it. If you hear a politician come out and say, we commit to adding 1.4 million backyards in the next 7 years, then they would have my vote. I don't care what else they ask for. They would have my vote. You see, the beautiful thing about being politically agnostic, because your only concern is housing and housing affordability and home ownership, you can't pick and choose what party you want to follow. You've got to go with the one who is going to give the people access to the tools that is going to allow them to have the lowest cost of ownership possible. It's the tools that will keep housing affordable or make housing more affordable. The tools that will keep house price gains lower than what they're going to be without that housing stock growth. We don't care who they are. In the United States, we couldn't care less about whether or not Trump was reelected for the sake of the argument or not. We had no problem with how he acted. We had no problem with what he was after. All we cared about was whether or not it was going to impact Canadian jobs. Biden, we don't care about. Is Biden going to negatively or positively impact Canadian jobs? And until voters start voting from a knowledge-based perspective and demand of these politicians that they add backyards to this country at a rate that allows housing affordability to return to the average Canadian family, what you actually will be voting for instead is for the government to have more control over your life by them telling you should rent. And, by the way, we're also going to help you have an affordable rental because some other taxpayer or some future taxpayer is going to help fund it. No. We would just want more backyards, enough backyards where the average regular Canadian family has an opportunity to move through the property ladder just like their parents did, just like their grandparents did, just like their great-grandparents did. We don't want to have constrained lives from those we elect.
Ross, yesterday the Canadian Real Estate Association announced home sales had declined. The market had tightened. Prices, while up, remained lower than earlier this year. How do you read what the Real Estate Association reported and why your spring forecast of peak price, as you called it, came true?
Well, I mean, that's really easy, Jim, right? You're forecasting your spring based on your fall housing market data. So you're reading the housing market data in the fall in the context to what it was in the spring of that previous year. So a full year ahead of time. So when you see how the structure of the market, the purchases are structured in the fall. Let's word it this way. If you see how the purchases are structured in the fall, you know what the consequence is going to be next spring. If you go to the old shows, go to the shows around this time last year, you're going to hear us talking about first-time buyers leaving the market, okay? We said first-time buyers were leaving the market. There is not another show in Canada where you heard that comment back then. That is when house prices started to rise ridiculously. We knew when those house prices started to rise and the compositional mix of sales that there were not going to be enough first-time buyers entering the market to keep the market going. We also told everyone that this would be the first opportunity in history where all the markets were going to move in the same way. So when we say that, we have to look in the context of what's been released over the last month or two, which is the slowing market. So I'm just pulling up B&M Bloomberg here, and let's look at their heading. Their headings are annual pace of housing. Well, that's the housing start comment. A housing market tightens in Canada for the fourth monthly sales drop. Okay, so that means the first-time buyers that left the market starting last July, well, actually COVID, when the lockdown happened, has come true because now you see they're not re-entering the market. And without first-time buyers entering the market, the number of sales has to plummet. We told the academic Paul, what's his name, with Generation Squeeze, we told him, hey, back in 2016, you want to get a housing correction in British Columbia, in Vancouver, to help people, millennials, be able to buy a house, just simply go out and tell them not to buy a house. Appear on television every week, every newscast you can get on, and tell them not to buy a house. Wait 6 months before you buy. Refuse to do it. Okay, well, guess what? First-time buyers didn't quit buying, and your sales chain started up again. Housing markets tightened in Canada for 4 months. Vancouver, July home sales down 11.6% from June. Montreal home sales down 30%. Toronto housing euphoria fades, a sales slump in July. This has never happened before, folks. You have never seen all housing markets, including Alberta, all the 4 major provinces, all moving in the exact same direction that we told you was going to happen over a year ago. What we do is not complicated. What we do is not clairvoyant. It's not anything special. We simply watch where the sales are today in order to know where the sales have to be 4, 6, 8 months later. And then we're always forecasting with that much lead. You don't make commitments to people about being able to forecast housing markets if you're not sure that you're able to do it. Look, we can't change when the date the OSFI brings in a new rule. If the OSFI brings in a new rule that we didn't know was not included in our forecast, we change our forecast when the rule comes into effect. We know how long it's going to take before the full consequence of that rule shows up in housing prices and home sales, which is often a year to a year and a half later. If they then institute another rule, well, all that's going to do is extend your forecasts out a little bit longer again, and then you adjust your forecast, giving people, again, a year and a half's advance notice. What's never happened was COVID. What has never happened was a national lockdown of a housing market, not just in one city or a province or a country, but globally, which is why all these housing markets moved the exact same way when they reopened, and then they crested at virtually the same time, and then shock. Oh, shock. Sales are now starting to slow. This is not complicated. You simply look at the data, you see how the sales mix is composed, and you're able to forecast. Look, we even use the starts that were in the previous question, Jim. We use the starts in the previous question to impact our 12 and 18-month forecasts. Because we know when those houses start, what the composition of those houses are, where they're going to finally be closed upon, how those realities, those numbers, will impact the resale housing market. And you can go back and you can fact check everything that you want from 1980 through till today, and this has been consistent with how it works. So when you hear things like you hear today, when you hear the Canadian Real Estate Association, oh, the market has tightened. No, the market hasn't tightened. What has happened is this. Last fall, people decided that it was too risky to move up the property ladder. So they didn't put their house on the market. That fear was misrepresented by your local realtors as being, oh, there's not enough inventory. There's not enough supply. So demand is outstripping inventory. We say no. It's rational, logical decision-making by existing homeowners not to move up the property ladder right now because their spidey senses are tingling. They're seeing the mountains of debt our governments are taking on. They're seeing stores not as busy as they should be. They're seeing restaurants not as busy as they should be. They're talking to their employers, and maybe their employers are indicated they're not able to give them raises, or the raises that they were due last year are not now forthcoming. The Canadian public is far more intelligent than any economist, far more intelligent than any academic, far more intelligent than any housing analyst, because it's a group, their spidey senses are just tingling. And throughout history, they've always moved ahead of the market. They move first. It's not a tightening market. It was fear of the market that didn't result in new listings taking place in when school started back in 2020. That got worse and worse and worse until you hit March. Then you had the foolish people, the people who were not foolish, who were misled into the housing market being in an uproar by your local realtor, who went out and bought houses of such a low quality per dollar that we may be a decade or more before that low of a quality is ever purchased again for a dollar. People like high quality per dollar. So when I read Korea reports, all I know is that I'm actually reading they're reporting on a housing market that existed 6 to 8 months ago. They're not reporting on the housing market as it exists today. They're reporting on the results of the housing market as it existed 6 to 8 months ago. You always have 6 to 8 months leeway. This is not like the stock market where it changes on a dime. The only time this market has ever changed on a dime in history was when the government locked housing markets down across the globe, around the globe. And that was your singular opportunity to see what happens when the sales chain is cut off. First-time buyers quit entering the market. You see sales initially surge, prices initially go toward extremely higher because more expensive houses are being purchased. Not because house prices are going up, because more expensive houses are being purchased. And then you see a peak hit in February, March, April, somewhere in that neighborhood, depending on normally how the market goes. This year it's a little bit easier to say. And then you've seen all of these markets swing in the exact same way in virtually the exact same month.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.